borrowed money from my sister, about $1,500. So the usual way, I blew the money.
First of all, I wanted to touch base on the stuff that you learned about on the 4 courses that you mentioned you took.
It really did not work out for me until I found more like the supply demand style of trading. So I take just one trade in a day, risk it 1% on my pro forma account. If it works out, fine. If it doesn't work out, the next day we'll go again.
Hello, everybody. Today we're joined by Mr.
Jonathan Obise.
Jonathan. How are you doing today, man?
Yeah, awesome. Cool. Feeling good.
Yep. So we are joined by Jonathan today to conduct another successful trader interview, and we are gonna peek at his strategy and whatever he wants to share with us, and also his experience. So yeah, how long have you been trading, man?
Well, so trading. Okay, so the first time I traded was in 2015. So I had I had read a bunch of, books and materials and trading, all of that. And I felt people were making money in trading. So I decided to dabble into trading. That was 2015. Borrowed money from my sister, about $1,500. So the usual way, I blew the money. And after then, I told myself I would never go back to trading because it was really, really, yeah, it was not easy taking that, So I decided not to do anything related to trading, went on with my life and all. Then around 2021, December, I decided, okay, this was something I needed to give a shot again. But then now I was now coming back, the right mindset. I told myself I was going to give myself 2, 3 years to learn properly, and yeah, so let's say 2022, 2023. So this is like 2.5 years and counting. Yeah.
Okay, so let's take a step back. So you started in 2015, then you waited 6 years to give it a second shot. So, okay,
Yeah.
give us a little bit of background about you. How old are you? What's your background in life in general, studies, work?
Yeah. Well, so I'm actually 35 right now. In terms of background, of course, I'm married. I have 2 kids, as a matter of fact. So now I also studied in terms of education. I studied civil engineering in school. I'm an entrepreneur. I run a number of companies, media, music company, tech company. But trading was something that I also felt that, okay, if other people were doing it, and I felt like they were actually making it work, there was something they knew that I did not know that made me run away from trading in 2015. And in 2015, I did not go through any proper mentorship. I did not take any course. I just got a bunch of materials, books, PDF, materials. I just read them and I felt I could just, jump into the market and all of that. So I really, really ran away after I failed. But then now coming in 2021, I felt, okay, this was something I could do again. I could give it a shot. And I also happen to consult, anyways, for international organizations. I consult for the United Nations.
Oh,
Um, in data, analytics and all. But trading, I felt it was something I could give a shot because I had seen people who, when I left trading in 2015, started learning how to trade. And I could see that they made it work, So within that time, so that was about like 5, 6 years, they actually made it work. And I told myself, I was like, hey, these guys they know something I don't know. So if they know something I don't know that's making trading to work for them, I can also learn whatever it is that they know. So I decided, okay, I was going to give it a shot again. And then I told myself I would give myself 2 years. 2 years. I would learn properly. I would buy a course. So literally, I took about 4 courses, from different people, and just to sort of understand what was working. Eventually, I found what worked for me, and then I tailored it to my own, my own style of trading. And yeah, so that's why I do. Essentially, also as a result of that, I decided to start an trading education company, and that's Power to Capital. To also share my knowledge, if I also continue to, yeah, grow in it.
got it. So you have kind of an analytical background because you work with the United Nations as a consultant in analysis in data. Okay,
Yeah.
so I'm curious now. So first of all, I wanted to touch base on the stuff that you learned about on the 4 courses that you mentioned you took. And then I want to touch a bit more about your approach to trading. So yeah, tell me a bit more about the courses that you took about trading.
Yeah, so well, the courses I took in trading, they were quite varied. Um, I started with courses that went, that sort of approach trading, using the typical, trend line, breakouts and all of those. But it really did not work out for me until I found more like the supply demand style of trading, really. It's just majorly supply, majorly demand, understanding structure, understanding the break of structure, understanding the flow of the market, and then, understanding liquidity and all of that. And basically just, it's more of a demand supply. Some people also argue and say it's also support and resistance in a way, but it was the explanation as to how the market flows, how structure, in the market really it's formed, and then how you can really just treat all structure, understanding where the market is going to, and then your entries and all of that, liquidity and all of that. So that was the course that actually brought everything for me to perspective, that I now felt to a certain extent I understood what the market was doing. Okay. And then after that, it was now a battle of, psychology, now dealing with my own impatience and just getting myself to that level where I can trust my analysis, trust my entries, and then just, hey, just jump into the market. So yeah, so that's essentially for me.
Okay, got it. So you started with first of all technical patterns, I guess,
Yeah,
then support and resistance, and then you found your cup of tea with structure order flow, I guess.
yeah,
What's called order flow these days, and supply and demand. Yeah,
exactly.
it's interesting. You know what's interesting? Because a lot of people explain market structure in a different way. They try to debunk each other, whatever. But actual market structure exists and comes from the order book, and it works like
Yeah,
in chemistry. You know how molecules interact with each other in different, like molecules interact with each other in a different way that atoms interact with each other in a molecule.
yeah,
It's better seen on organic carbon molecules, but yeah, it's interesting because it's an actual logic and the market mechanic that comes from the order book.
yeah,
So there's a lot of people debunking, trying to debunk market structure, and I get it because many people don't talk about it the right way. But again, it's a true concept and it comes from the order book, and it just
yeah,
expands from the micro level to the highest level. And yeah,
yeah,
I like to see that somebody else has delved into it. Yeah, so these are the courses that you took. Now, this is your basket of concepts that you're trying to trade with. And how do you approach the actual speculation side of the thing? So this is what you learned. How do you
yeah,
translate it into speculation? Do you have trading models? Do you have a strategy, trading plan?
yeah. So, well, definitely, I do have, of course, a strategy. Without a strategy and a trading plan, definitely I wouldn't even, I think be where I am today. So I basically learned, using all the different resources I had access to, and then tailored that to my own trading plan. So, of course, I have my trading plan covers everything from the structure to what I need to see, the confluences I need to see before I take a trade. And then also the session. So basically, primarily I trade the London and the New York session. I don't really trade Asia session, but I trade just those two sessions. And then I have a certain amount of risk. Okay, so that's for prop firm now. So I just risk 1%, per trade. So I can decide to take one trade and risk 1%, or I can decide to take two trades and risk just 0.25%. So no matter what happens at the end of the day, I'll only risk 1%, per day. So if it's a profit or if it's a loss, that is it. I'm done for the day. And of course, that wasn't, I had to, put that into my plan because I had to also battle the psychological effect of taking a loss, and then you want to make back the money, and then you just end up stacking losses. And if only you were just patient, the next day you would see a setup that then works and all of that. So I had to sort of build that into my plan. So I take just one trade in a day, risk it 1% on my pro forma account. If it works out, fine. If it doesn't work out, the next day we'll go again. So yeah. So that's basically for me. So my trading plan, it's majorly just structure that is linked to the sessions, London and New York session. So if I see a setup during London session, I take it. If I don't see, I wait for New York session and then I take it. But it has to basically, I look for certain confluences. You have structure, you have liquidity, you have what else? So liquidity, structure, inducements, that's all I look for, yeah, and the bias of the market.
Get it.
So
So you use structure with a cyclical approach too. So you look at structures and you give them context in terms of market sessions and market cycles overall, right?
exactly, yeah.
That's very interesting. That's very few people do that. Yeah,
Mhm.
interesting, interesting. So you talked about your risk management. So how are you managing risk right now? You said you are risking 1% a day on accounts, but you
Yeah.
may decide to take just one trade, so risking 1%, or two trades, risking 0.5. How does that work? Like, are you sure that when you risk 0.5 that you will get a second entry? How do you handle that? Is it just one on one position?
Yeah, so it all depends. So sometimes, for example, if I feel, depending on the structure that I see, or the setup rather. So if the probability of the structure working out, it's high, I could just go all in, 1%, and just risk it on the trade. But then if I'm not, if it's still my setup, but then in terms of my confidence, I'm not too confident. I could decide to say, okay, let me just risk 1% here. If I get a second entry, maybe during the same session or, New York session, then good. If I don't get a second entry, no problem. I just wait for the next day. Because I've come to learn that patience pays. You may want to make all the returns, on a single trade, and then that's how you just continue to take losses upon losses. So I've basically just mastered the art of ensuring that I just stay patient. So if I take losses, I wait for the next day. It allows me to sort of go back, review what I did wrong, come back with a fresh mindset, and then I take another one. If it's a loss, no problem. But that space, essentially just helps with my psychology. It's not easy, but for me, that's what works. So it helps me, that space of 24 hours, whether 24 hours or less than 24 hours, anyways, just helps me to sort of relax. And then when I come to the market, I'm coming with a fresh mind, to sort of take on opportunities. But when I also risk like 1%, for example, it doesn't necessarily mean that I can't sort of stack the trade, right? So of course, I would always, if I need to stack the trade, I would have to sort of adjust my risks, make sure my previous positions are break even so that I'm not risking more, and then I can just continue to stack like that. If, for example, I see setup that actually is going to work out, do I expect to work out? So, but essentially that's it. Yeah.
Like the one that you will show us today. We talked a bit before the interview, and you
Yeah.
anticipated to need it. Yeah. Okay, so just to recap, I had actually a follow-up question. Does it ever happen? Like, how often does it happen that you either don't take trades in a day or that you skip the second one if you're risking 0.5?
Mhm. Yeah. So for my own type of setup now, I literally see setups every day. And it's also because when I started, I used to just focus on EU. But now I trade every other thing. I trade literally every other currency. I don't really trade crypto, so but just the currencies. I trade everything. So all I'm just looking for is the setup, and then if I see it, I take it. And then of course, depending on the pair too, and also depending maybe on fundamentals like news. So that would help me determine, okay, which one I should go for, which one I should leave. Of course, there are times when I would take a pair and then maybe it ends up as a loss. And then the other one, the same setup I saw on maybe some other pair works out, but it's just what it is. So, but the fact that I've built that into my plan, that 1% for me on my platform account, that is it. If it works out, if I'm wrong, I'm wrong. If I'm right, I'm right. So I just take it that way. And that's it. Yeah.
Interesting. And just one more question. So the only way that you divide risk is just by deciding to risk 0.5. You don't do 0.3 three times a day. Never.
No, no. So I do 0.5 or I just go 1%. If I'm confident, on the setup, I could just go the whole 1%. So I know that that's the only trade I'm taking for the day. If it works out, we're good. If it doesn't work out, we're
Yeah.
good. So that's it. And then if it happens, that I don't see a trade setup for a day, which sometimes it may happen, but rarely, because since I look at, various pairs, really, I would always see something. I could decide not to take a trade for whatever reason, but I would always see the setup, across the different pairs. But yeah, that's it.
Okay, so to recap for people watching us, and correct me if I'm wrong, Jonathan, how he approaches trading right now is he looks at market structure linked with daily cycles and session cycles. So that's the reason mostly why you risk zero point 0.5 just twice a day, because you have your London structure, most likely, and maybe you have your New York structure on a single asset, right? So you don't have the
Yeah.
need of dividing into three parts because you don't trade Asia, and you have one structure, one main structure for both sessions that you
Yeah.
trade. Interesting, interesting. Would you mind sharing with us the screen? I'll enable the screen share so that you can share us the trade that got you the payout.
Absolutely. With joy. Okay, cool. So I'm gonna go on the chart, but just to show that this was the chart at the time, where this was basically the chart, the different trades that led to the payout. So it was essentially, as you can see, a bearish market, and then I was able to catch, the setups, and then I just stacked and stacked and stacked, until I got it was actually because I was in a drawdown, as you can see. I was in a drawdown of about I think about 4%, yes. So basically just that brought me out of drawdown and then ended up in profit, and I decided to just slow it down until payout. Okay, so here we go. So this is trading view. So we have here, let me just go to, I think that was around around here. So this was the 29th, 30th of August. So you can see it basically was a downward trending market. So for me, I simply look for structure, number one, structure, and then I look for liquidity, and then I look for inducement. So those are just the confluences I look for in my trade. So this here, you can see here that we had this push. I can't really remember what happened here on the 23rd. That we had this, massive bullish price action here. However, we had on the Friday. So from here, we had Friday. We had this, as you can see, let me just expand this a little bit. You can see here we had this price sort of pushed to the upside, cleared all of this highs, and then we had this bearish sell that basically took out the previous low. So essentially for me, looking at that and looking at all of these imbalances, I knew that, okay, it was essentially in terms of structure, we're looking at a sell setup, and after price basically just, did that, you can see here, based on how I trade, is just break of structure, break of structure, break of structure. So I'm just looking for break of structure, retests, it adds confluences of inducement, liquidity sweep, and then that just informs how, I stack my positions, how I enter the market. So you can see here, basically we had this, this was the first structure that was taken out. This low also now got taken out. This one got taken out. Eventually we had this one here, that also got taken out. And then we had, all of this here. So the trade I just showed was actually taken around this area here, as you can see. So here, basically, you can see a few things. Let me just draw some of these things here. With the trading view icon. So here you can see, and draw this. So this was the supply zone. So if I just zoom in there, you can see here the price registered this low and then pulled back, and then we had a little kind of I'm looking for something. I don't know where my tools have gone to. Anyways, we had here, you can see this high pushed down and then swept this high, and then from this high we had this low now taken out, essentially creating a supply zone for us. So now I knew that I had a little sweep of liquidity here, so I was expecting price to kind of pull back all the way here and then sell. So with that, and then we had all of this inducement, all of this minor structure. Consider this here. So I had all of this minor structure in here. So basically with that, I had a sweep of liquidity, I had a break of structure, I had inducement for price to return to this supply zone that led to this break of structure, and essentially took a sell from here. Now, in terms of the market structure, I already knew that the market was going to be bearish because we had here a massive bullish price action, and I knew there was a lot of liquidity already built up, that the market sort of needed to kind of, move into. So that basically just allowed me to kind of stack my position. So after taking the sell here, I was just basically stacking it, just stacking the positions and then just stacking it. And then, so we had multiple positions like I showed on the chart. But for just want of time, let me just draw this here. So here you have this, the supply zone. So we have that supply zone. So for this one, for example, you can see, so my confluences I look for usually I sweep of liquidity and then inducement plus structure. Just three simple things. But here you can see for this setup here, for example, I didn't really have a sweep of liquidity for this supply zone that led to this low being taken out, but I was willing to sort of, take the risk and just, sell it from here because I knew where the market was going to. So sometimes I would see everything I need to see, liquidity sweep, inducement, for the structure. Sometimes I may not see a sweep of liquidity, but because of structure, I would still have confidence in the trade. And it is in those, scenarios where sometimes I have to make the decision if I'm going to go 1% full or I'm going to just fix 5% because I'm not seeing everything I want to see. But I know where the market is going to go to, so I want to take advantage of that move. So I don't need to see everything, but if I have, an understanding of the structure and what the market is doing, I'm willing to take the trade. So this was basically it. So this move essentially from here to here was what led to, brought me out of drawdown of about 4% thereabouts, and then, placed me in profit. And then I decided to just slow pedal on trading on this account until payout. So that's it. So it's as simple as that. That's just my trading style. I trade off the 4-hour and the 50 minutes. So the 4-hour establishes for me the higher time frame structure. I don't trade all the 4-hour and then I just go down to the 15 minutes now, look for my entries, look for all the confluences I need to see. And that determines, how I trade. And just as simple as that. Yeah.
Interesting. I mean, not simple, but yeah, it's very functional. You have a very functional trading funnel. We could define it as that.
Yeah.
Is
But
this a
yeah,
live trade that you're
also,
on?
yes. So let me just also explain the same concept. It's a concept. It's as simple as that. It's the
Mhm.
same concept I also have, and I'm going to show you on different pairs that I already have live right now. I didn't take all the trades that I have going on here, but you can see for this one, for example, we had here. Now, for this particular trade, there's also of course, before CPI comes out, I'll have to close any positions I have, but there's also the knowledge of the fundamentals. So I know that sometime before CPI, the market might begin to price in the news. So for this, for example, after the whole price action from yesterday, I actually took a trade here. And this trade now, I rarely trade Asia session, but because of CPI, I knew that we're going to have a reversal. I just knew, okay? And this is experience, you can say. But here you can see here, we had the same structure. So you had here this low, price pushed up, swept this low, and then price pushed out. And then I knew created some inducement, structure around here. And price was just consolidating around here. So it was Asia session yesterday or early this morning. And I just knew that price was going to push out because CPI was due today. Just, you can call it intuition, but also the structure also fit, for me. So everything was in place. So I decided, since I knew that the market is going to push out of here, so I decided to take this trade. So I actually took a 1 to 2. Yeah, I only took 1 to 2 for this. And that's essentially gave me what I needed. So typically my risk to reward is 1 to 3. But I just decided to just take 1 to 2 for whatever reason. So, and that was it. So here you had the sweep of liquidity. We had here inducement, and then, I price pushed out. And then also this Monday in London session. For this one, this is just what I call sort of an inducement block. So this was just structure, low, high, but then we had an inducement block. So I was expecting price to take out this low, tap into this and continue. So this worked out on EU, but I'll show you GU. GU did not work out. So on GU, the same thing. So the first position, in terms of what I did this morning was we also had this low price pushed out and then had this inducement structure here. You can see eventually price took out this low, but then tapped into this gap here before now price is pushing out. So this did not work out the way it worked out in EU. Then on you have New Zealand dollar here. This is my typical setup. So this one played out, it's playing out perfectly, or has played out perfectly, I think. So here you can see sweep of liquidity, which led to this high. Been taking out, price created, some sort of inducement around here. Price taps into this area, early Asia London session, and then you can see price essentially pushed out after that. So this is essentially just a setup. And then okay, this was from yesterday. So on gold, you can see this. I didn't take this trade, but this played out yesterday. Sorry about the noise on the chart, but just to show what this looks like. So you can see here,
No worries.
high, low, price sweeps the low, eventually pushed out, and then creates an inducement structure here. Price returns, taps into the sweep zone or demand zone, and then pushes out. So that's essentially just my structure. And if I just go through all the pairs, so this is essentially what I just look for in all the pairs. So look at AU here. So the same thing here. You can see here we had price registered low here, pushed out a little bit, created a minor structure here, swept this low, and then pushed out. This did not really take out this high, but then based on intuition and also knowledge of the fact that CPI is going to come out today, the market will sort of buy into the news, and then this was enough to sort of have this structure in place. So, but that's essentially it. So structure, inducement, liquidity sweep, I'm good. And
Yeah,
fundamentals, of course.
being aware of fundamentals, yeah. In terms of
Yeah,
macroeconomic data coming out, I guess. You use options
yeah.
in your trading?
Options?
Yeah, options or other type of fundamental data, not related to macroeconomic news release.
No, not really. Not really. Yeah.
Okay, nice. I mean, nobody has to use everything. I was just curious. Yeah, very nice. Again, thank you very much. Jonathan took us in a long journey, thankfully, about into his approach. You have been very thorough. Thank you very much. You've shown us a lot of examples. And
Yeah.
yeah, what struck me about your approach is that you're very organized and you like to, just looking from your charts, I can see that you work in a very clean way and stuff. Also looking from your setup and judging from how you speak, or you struck me as a businessman as you are, as you told me. So I think this is what got you to lock in this $18,000 payout. And yeah, thank you very much. Thank you very much. And again, uh,
Yeah.
I hope I hope that we are going to disburse more players to you in the future because you have a very good
Ah,
work ethic and a very nice approach. So yeah, thank you for sharing everything with us today.
the honest mind, really.
Do you have any advice that you would give either yourself in 2021, back when you gave the second shot to trading, or to young people now trying to make it into the trading world?
Yeah. Well, I think the advice I'm going to give is, and this is what I share with anyone who wants to start trading. You need to have a strong why, because trading, it's if trading was easy, everybody was going to be successful, really. But it's not really easy. The way a lot of times successful traders make it look. So if you're coming into trading, you need to have the right perspective that, hey, I'm gonna need, just give yourself room, maybe like 2 years, okay, to learn and learn properly, and then try and fail and learn to walk. Because at the end of the day, the perspective you must have is, you go to university, you spend 3 4 years, and you come out to get a degree, and you're looking for a job. And here you have trading, on the other hand, that can actually give you freedom, like financial independence. You can make as much as you want to make. So if you have something like that, there's no reason wanting to just rush the process. That's just the truth. So many people get disappointed because they come into trading, they see somebody driving a flashy car, having a nice house or whatever it is that they show on social media. And as a result of that, you're drawn in by the glamour and the bliss. And then you think in the next 2 months, 3 months, I'm also going to become profitable. Most of the time it never works. So if you're able to allow yourself to have room, to grow, so give yourself 1 2 years, depending on who your mentor is and all of that. And then, because it's not just the technicals, there's the psychological part of trading, which is the most difficult thing to make, to master, because you begin to discover yourself. You don't have patience. You get angry easily. You want to revenge trade. So I think those are the things that you're going to deal with, that usually when you start learning, you may not realize that those are the things that are going to take time. So depending on your personality, your strong why, that would determine how long it takes you to really master yourself. Because once you master yourself, then eventually you can become a good trader. But that's really what takes the most part. The technicals, you can learn technicals in 1 month or 2 months. You know everything. In hindsight, you can always go back and say, oh, this did this should have done, I should have entered here, I should have entered that. You can learn that in 1 month. But the master psychology, that might take anything from 1 year to 5 years. So yeah, so just give yourself room. That's it.
Give yourself room. Jonathan, thank you very much for this advice. I hope the people will make the most out of it. And again, thank you for joining us today. You shared a lot of golden nuggets with us. And again, I also hope that people will take advantage of that too in the YouTube video. Again, thank you for being with
Yeah.
us. This interview has come to an end, and we will
Yeah.
catch up with you guys on the next one. Peace. Have a good day, everyone. Have a good day, Jonathan.
Thank you for having me. Bye bye. Cheers.